Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I would like to take a look at the NQ, the 3-minute and 15-minute NQ yesterday, which was Tuesday, November the 29th, and have a look at a great example of what I call my Holy Grail trade setup. This is a great trade setup because it represents the best profit potential for the smallest initial risks. So an absolute great trade setup to look for. So this is the 3-minute chart we've got here. You can see we've got some various automatic setups here. However, I want to put these in context of the larger degree trend for the more experienced MTPredictor users. If you remember, the new MTPredictor users just use the STF color. However, we know that any indicator is always lagging by definition, so therefore advanced traders can override the STF color and go to the 15-minute chart. So I want to look at the position yesterday, in particular when the high of the day came in here, and then move forward from there. So if I swap to the 15-minute chart and I go back to before the day opened yesterday, what we can do is use the decision point tool in MTPredictor to put a support and resistance zone, in this case resistance because it will be a high, on the chart before. In other words, it's a leading indicator, and that's the most important part, is it's leading. So let's see how we do this. Decision point, choose swing high or low, click on the last important pivot, which is actually up here. As you can see, that level is now on the chart in advance for you. So let's see what happened basically. Move forward. The day opened around here somewhere. The market then started to go up, 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 and can you see how it tagged this high at 10:15, 10:15, that's New York time, and started to decline back down. Started to climb back down, decline back down to here, and then actually no, I need to go back a bit further. It needs to. Here we'll see that the market was declining down till about 11 o'clock. But the point being is that this 15-minute decision point was on the chart before. Okay, that's the important part, is on the chart before the market got there. So you knew that was a larger degree resistance area. Then at this point in time we were coming off a 15-minute resistance area. So let's go to the 3-minute chart and see how this would have looked at the time. If I go back and have a look at the chart, you can see market came up into this high here, which we now know was the 10:10, 10:18 high. So we knew that this was an area where there was an important high, and that's the first criteria we look for the Holy Grail trade setup. There are three guidelines or three parts to this. The first part is whether we have a move here. We had a decline off an important high. So this is where we go to the 15-minute chart to decide whether the prior high or low, in this case a high, was an important high. So we've already ascertained that this was at 15-minute DP resistance, so it was an important high. We then had an initial decline down. This in Elliott wave terms is a wave 1. We then had an initial correction up into our TS1 cell here. This is considered a wave 2. Because it's the first correction against a new, in this case, downtrend, the STF will always be the wrong color. That's why the advanced traders ignore the STF in this particular trade setup and go to the larger degree chart. So what difference does this make? Well, if I go back to here, you can see here's our initial setup. If I put our normal analysis on, it will tell you our position sizing, which is our risk control. That stays the same. At our first target as a potential 3.7R profit. However, the difference we do because of the Holy Grail trade setup is because we know this is an important high. We've already ascertained that. Therefore, this is an initial wave 1. I've already said that. Therefore, this is a wave 2. After a wave 2, we anticipate a wave 3. In other words, a strong wave 3 decline. So therefore, we don't aim for this target. We actually aim for the typical wave 3 WPT target, which as you can see is right way down here. So if I amend the risk reward for this lower target, rather than coming out for a potential plus 3.7R, we're actually aiming all the way down here for a plus 10R trade. In other words, a potential profit of 10 times the initial risk. That's why I say these trade setups are so good, because the potential profits are huge in relation to the small initial risks. So that's the initial setup. So let's see how the market unfolded. Well, the market came down. We're ignoring this TS3 buy setup because we know the 15-minute chart is in a downtrend. Therefore, the advanced traders among you would not be looking for buy setups. Plus, we already know we're aiming for this target down here. Market then starts to go up, down, and start to come back down here into this area here. Now, this is the another important point I want to stress, is that even though we have a potential target down here, if I move the day forward, you can see that it never quite got there. It was almost, but not quite. But what I want to look at as well is we always have to monitor the trades as they're unfolding. So let's just have a look at this particular swing down here. But I'll just clear the chart off so it doesn't have any confusion. If we look at this swing down here, remember we're anticipating this to be a wave 3. What do we know about wave 3s? Well, we know they should divide into a minor 5-wave pattern. So let's take a look. In MTPredictor, placing the Elliott waves on the chart is really easy. Elliott wave tool, we clip it on intermediate, we click choose swing high or low, we come down here, click on this low, and lo and behold, MTPredictor has found that this decline was a 1, 2, 3, 4, 5. But here's the important point. Unlike many other Elliott wave programs, we have what we call WPTs, in other words, wave price targets. These are the areas where all the Elliott wave patterns are most likely to end. And as you can see, the low here is right at the typical wave 5 WPT, not the minimum, not the maximum, which is this one, it's the typical. And as the name implies, this is typically where most 5-wave patterns will end. And as you can see, if I go forward, that actually nailed the very low of the day for you. So what do you do when you're in this short trade? Okay, do you remember we're in this short trade from here? We're aiming for a potential target down here at our typical wave 3 WPT down here for potential 10R profit. However, as the market got down here, we were very, very, very close to it. As you can see, very, very close, but we had a 5-wave pattern unfold here. So therefore, we could override our initial target and say, actually, once the market hit this typical wave 5 WPT, we know that the probabilities are saying that actually this decline is complete. Therefore, at the very least, we want to start trailing our stop just above the highs, which are here. Because you can see this is, I'll just delete that one. This is a blue buy bar. So when we have a blue buy bar at a typical WPT, odds on if this high is taken out, then the whole sequence is complete. So do you see here, even though we were not quite at our initial target, at the very least we want to lock in a plus 8.8R profit. And as you can see, that's indeed what happened. The market made the low and went back up again. So this is a very good example of how not only can we project targets, but we can also monitor the markets using the tools in MTPredictor as the market's unfolding to help gauge our stop loss management. But overall, this turned out to be a very, very good trade indeed, and a great example of the HolyGrail trade setup. And again, I want to just go over the criteria for the HolyGrail trade setup, because as you can see, having an initial risk of $400, this is our position sizing, to then have a profit of 8.8 approximately times bigger than that, in other words, turning an initial risk of approximately $400 into a profit of, well, 3,500 is a very, very good trade indeed. So again, the criteria you're looking for is a major high or low, which we had here. This is defined by our larger degree 15-minute chart. Remember, we had our 15-minute, there it was, our 15-minute DP nailing our high there. We then have an initial decline, which is our wave 1. We have an initial rally, which is our wave 2. We then take our trade setup, which we have here. We then use the typical wave 3, not the first target, as our initial target for this trade. And in this particular example, we then managed it as the 5 waves came down. And the end result, as I've already said, was a massive plus 8.8 R return for the day. So a very, very good trade there with a massive profit for a very small initial risk. This is why I call it my Holy Grail trade setup, because I believe this is one of the best trade setups you can, because it gives you the largest profit potential for the smallest initial risk.